If you're looking to get into crypto, well, this might be just the best opportunity to do so. And congratulations, you're one of the early birds into the next bull run. And I'm going to tell you exactly why I think that is the case. So first of all, let's just pull up some data real quick. And this is the halving data. And you can see that after the halving of 2012, Bitcoin was $4. By the time the next halving in 2016 occurred, Bitcoin was $420. And then went from 420 to 7,100 at the 2020 cycle. Now, we don't know where Bitcoin's going to end for the next halving cycle, probably around the 35,000 mark somewhere, give or take. But nonetheless, the opportunity isn't necessarily leading up to the next halving cycle in 2024. It's what we can start building as far as a position for the opportunity that comes after the halving of 2024, okay? So you can see huge amount of returns so far. Now there is diminishing returns on any sort of asset class that is continuing to build over time. There's going to be diminishing returns, but nonetheless, if history is any indication, there is still a huge opportunity left in crypto, potentially for many years to come, okay? So as of right now, I have the 7-period and moving average and the 25-period exponential moving average on Bitcoin's monthly chart, just with the Fibonacci candles up, just to smooth things out a little bit. And I'm actually going to do something real quick here. I'm going to hide the price action, because you can see the bull run that started back in 2015. There was something that occurred, and this goes right hand in hand with our trade setup and how we handle these indicators with these two moving averages. The yellow line crossed above the blue line. I'm going to zoom in here so you can really see it. Crossed above the blue line for just a little bit, and then it crossed back over. And that blue line crossing back over the yellow line was an indication that the next bull run continued. And we can pull that up for a second. You can see that Bitcoin went from about $240 some all the way until it touched again at $5,400. So huge return. Now this didn't even necessarily cross there, but nonetheless they touched, so we counted it, right? Now Bitcoin did back in October of 2022, we had the yellow moving average cross above the blue moving average, which is what you want if you want to go short, but nonetheless it's just showing you that we're in a negative momentum as far as price action. Price action is more likely to go down during that time. You're more likely to be in a bear market during that time. I'm going to hide the price action one more time because I want to show you something pretty important here. And you can see as of November 1st, 2023, the blue line has crossed back above the yellow line, indicating a potential new momentum and a potential bull market is beginning. Now let's pull up this Trendillo real quick. Now Trendillo is on the logarithmic because I like to use it for when it crosses above and below the zero line. So I like to see the exaggeration. And if you get rid of this for a second and we're going to pull up the price action again, you can see that the Trendillo, when it first went above the zero line, it was 2016. The price of Bitcoin was $430. By the time it crossed back below that zero line, the price of Bitcoin was $5,500 essentially. It crossed. Now there was a little bit of a fake out here, but I wouldn't consider this a fake out as much as I would consider some consolidation before the next bull run, because it didn't go down too much in price and actually like 4 or 5x right here. So, but we'll negate all of that. And we will call it a wash, and we'll say that the next time that the Trendillo crossed above the zero line, Bitcoin was at $7,700. And when it crossed back below the zero line, Bitcoin was at about 18,000. So again, huge returns. Now keep in mind, you could have very easily sold out at the top here, around 69,000 or whatever it ended up going to. I think it reached as high as 72,000, 74,000. Okay. So what's important to keep in mind with that said is that the Trendillo is actually now turning back up towards the zero line. This isn't something that necessarily happens every other week, every other month. It can last years above and below the zero line, or just above and below, or just flat, above and below, but flat, right? And so this is actually a very great opportunity. For those of you that like to use the MACD, let's pull this up quick. The MACD line as of November 1st, 2023 is back above this zero line right here for the first time since September of 2022. So again, a pretty long time. Now, if anyone uses the MACD, you know that the MACD line, that blue line here, is considered bullish when it is above the zero line and bearish when it's below, okay? So all great things. Now let's go down to the weekly real quick, and let's take a look at Bitcoin from the weekly. Now you can see this HA market bias indicator right here. Something to keep in mind is that we have had red on the market bias indicator for about a year now on Bitcoin. And while I made previous cases and previous videos for both why that could be bullish and bearish, or just bull and bear cases in general for Bitcoin, I pointed out a couple of things. One, I said that this is the first time in a long time that it has happened, and that could be an indication that crypto may have seen its peak, and that we are headed lower for a very long time, although that is not my thesis. So my overall bull thesis with the HA market bias indicator, I'll just say right now, for one, we have a dark red right now, indicating a weakness in its current trend, which, given the fact that it is red, it is weakness on the bear side, okay? Even though the price action is above it, it is still bearish because this is red. And it is weak because the price action is above it, and has been above it for quite a bit of time now. So if you were to see this come down and then bounce back up, that is most likely going to turn this green right here. And unless it's a fake out, that could be the beginning of the next bull run, okay? So you can see also right now that the blue line is above the yellow line on the two moving averages, which is good, what you want. And you have all systems go on the Trendillo and the MACD. So the only thing that you're technically waiting for, literally technically waiting for, is the HA market bias indicator to turn green. Now we're going to bring up Ethereum next. And Ethereum is about the same thing. Now with Ethereum and Bitcoin, you will notice that it went years, and on Bitcoin even, it went multiple cycles without ever turning red, as I previously mentioned. But nonetheless, you still actually can determine bull and bear markets based on the strength, with the bright green, yellow being strong, dark green, yellow being weak, okay? And we have essentially the same thing right here with Ethereum. It is weak as of last week. Actually, no, this would be the first candle where it's actually weak. Now, keep in mind, this indicator can repaint, but it is one of the small negative effects of this powerful indicator, which just smooths out price action, doesn't give you all these false signals. And you're not buying and selling just, it's price action's over the HM market bias indicator, we're going to get in. And then 2 weeks later, we're going to sell out because it's below it now. Evens everything out, okay? Now, because of diminishing returns, it is important to take advantage of some of these mining stocks, these mining companies, these crypto mining companies like Mara, HUT, BRCC. So you can see that, Mara is probably the quote-unquote safest. I wouldn't call any of these necessarily safe, but this is the safest mining company. It's huge potential from going, as of right now, $10.31 back to the previous high of $76.71. You have HUT, as of right now, is $1.90. Previous high is $15. So, if you threw $20 into it and it goes to zero, you lost $20. But if it goes back to the previous highs, you can end up gaining $300. That's really good risk to reward ratio. Then you have the juiciest or riskiest of it all, BRCC. is at $3.81. It is hugely volatile, and it can go back up to potentially its previous highs at $32.92. Now keep in mind, these could go beyond its previous highs sometime after the next halving cycle, which is what I do believe is going to happen. So if you're following this channel and you understand my thesis on TQQQ and NASDAQ and how eventually, while I don't know when, eventually NASDAQ is going to get back to its previous highs, we are therefore taking advantage of TQQQ, which is a triple leverage ETF of the NASDAQ. We're not trying to time it. It doesn't matter what road NASDAQ takes to get there. We are scaling in appropriately and using risk management, aka not throwing our entire account into any one thing or one sector or one strategy. And this is another perfect example of a trade idea. So if you like these trade ideas and you want to see more, first of all, just hit the like button for me, because it is the easiest way to help out the channel. More likes I get, more views I get, the more people are telling me that they want to see more of my content. And if you actually personally want to see more of my content, then hit the subscription button so you can see all of my latest content. Turn on the notification bell so it tells you as soon as I get a new video out. Until then, we'll see you next time. Thanks.